Good morning, everybody. We've got a mixed trade in the grain markets here early on Monday morning. It is 6:30 a.m. Central Time. December corn futures down 1 3/4 at 575.5. January soybeans down 2 3/4 at 1241.5. December Chicago wheat up a half cent, 817.5 last trade there. December Kansas City wheat down 1 1/4 at 831 3/4. December spring wheat up 3.5 at 1053.5. If you guys are listening on the podcast, appreciate it. If you're watching on YouTube, hit that subscribe button. Help me to get to my goal of 5,000 subscribers. If you need some additional assistance from me, go to my website, standardgrain.com. Click on Grain Marketing Plan. Check out my subscription service, guys, $49.99 a month. A ton of information from me. All my grain marketing recommendations, morning email, text message service, subscriber-only videos. This is a monthly service. Cancel it at any time. No other fee, no other obligation. Will not try to sell you anything else. We had a big spike up late in the day in the soybean market on Friday, and I think that spike up can be attributed to rumors regarding Chinese purchases. Trade chatter suggests that Chinese buyers were in the market for up to 15 cargoes of U.S. soybeans, and you may see those rumors confirmed via flash sale either today or tomorrow. Now, in regard to the rumor mill, it has not been entirely accurate as of late. A lot of the Chinese buying that we've seen in soybeans in particular, it's been in smaller increments, and you haven't seen the flash sales reported. You're still seeing like decent weekly numbers from China, but you're not seeing the flash sales. So we'll see if that's confirmed here today or tomorrow. Now, when you get into reality here, we had our export sales report last week, and I know I talk about this every week, guys, but it's important, so I'm going to continue to talk about it. We had a weekly export sales number reported on Friday, 1.29 million metric tons. That's down about 12% versus the same week last year. Total accumulated sales for this current marketing year in soybeans are down 33% from where they were last year. And if you're watching this, if you're looking at my chart here, this is a seasonal chart of soybean commitments, and this is the last 10 years. This purple line here is last year. We had a record pace. This line in the middle that I've got highlighted is this year. We've got a run-of-the-mill program going. We're more than 30% behind last year. Now, USDA projects that soybean exports for the marketing year will decline by only, I think, 9%. So we've got this massive gap between what's actually been sold, what's actually been shipped. Shipments are down more than 30% also. And you've got USDA telling us exports are going to be only down 9%. So we have a major problem there. Even if these Chinese purchases are confirmed here today or tomorrow, say it's 1 million metric tons, we're still 16 million metric tons behind last year's pace. And no, we don't need to be at last year's pace, but we need to be a lot closer. So the export program remains a big problem here. Now, we will see some good demand news in regard to soybeans today, finally. We're going to see our October crush number from NOPA. It'll be out this morning at 11 a.m. Central Time. We should see a very strong crush number. 182 million bushels is what's expected. That would be up more than 18% from the September number. It would be just behind October of last year, but October of last year was the best for any month on record, over 185 million bushels. Processor margins are very, very strong. So what we've got to hope here is that the domestic processor, the crusher here in the United States, picks up the slack that the exporter has left, because with that poor export program, we need the demand to come from somewhere, and ideally, and I think where some of it's going to be picked up at least, will be on the processing side. China is planning to ease restrictions on GMO crops. There was a document from the Ministry of Agriculture and Rural Affairs published on Friday, indicating that they're going to start to approve some GMO seed varieties. For the moment, China has never allowed its farmers to grow GMO corn or soybeans, but they've allowed the import of those crops, of course, for feed usage and ethanol and that sort of thing. So the government has kind of laid out a path here where Chinese corn growers could be growing GMO varieties by maybe 2023, what this Newswire story suggested, or that they could get into some small-scale commercial trials by that time. For the entire country to implement this, it would be 3, 4, 5 years out would be my guess. It's impressive because China's still the world's second largest corn grower behind the U.S. They're going to grow just south of 11 billion bushels this year. The U.S. is around 15. So it's that they could end up being the world's largest corn grower in the next 10 years if this all goes according to plan. Corn Belt's going to be mostly dry here this week. You're going to see kind of a band that starts in, I don't know, it'll start in Arkansas work its way up through parts of southern Illinois, Tennessee, parts of Kentucky, Indiana, most of the western Corn Belt, and almost all of the plains very much dry here over the next 7 days. So just a little bit of rain in this band here. It'll go as far east as maybe the central part of Ohio. Over the last 72 hours here, just scattered stuff, nothing really heavy. I guess Michigan and northern Indiana saw some rain. Also parts of Ohio saw some rain here in some decent amounts, maybe up to an inch in those areas. Radar this morning, totally quiet. Maybe a little bit of snow moving across some parts of Iowa, Wisconsin, maybe parts of Illinois. The CFTC report was delayed due to Veterans Day, so that'll be out after the close today. U.S. dollar index posted its best trade since July of 2020 on Friday. You had that hotter than expected CPI number, and that inspired a spike in long-term interest rates and also fueled some speculation that the Fed may hike rates sooner than expected. So higher interest rates are dollar positive. Crude oil is under some pressure this morning. Your nearby January WTI contract trading below 79, 78.60 last trade there. There's two different things going on there. Some discussion of a possible release of reserves from the U.S. Strategic Petroleum Reserve. That's one factor. The other one is that people are pointing to rising COVID cases and associated demand issues. We're not seeing those demand issues yet, but I suppose that's something that could develop certainly. Remember, NOPA crush this morning at 11. Cattle market was kind of a mixed bag Friday. The fat cattle were okay, but the feeder cattle really got beat up, and the feeder cattle market has not. They haven't liked this spike in the corn market. Cash cattle was 131 to 132 mostly last week. We'll see what develops this week. The box beef market was mixed on Friday. U.S. dollars pretty quiet ahead of the cash open. The S&P's up 10, the Dow's up 100, bonds up a little bit, gold's down $5, crude oil down again $1.12, 78.57 in the January WTI contract. Everybody have a great day today. I'll talk to you guys same time tomorrow.